Hello everyone and welcome to IPO Market Watch. Everyone, on February 28, 2025, we had very powerful data that came out in regards to the trade deficit. In this video, I am going to explain so easily that everybody will understand what the trade deficit is, how it works, where we are right now, where is the US, what is the US current state of the trade deficit. Why this chart that I will show you will shock you, guaranteed. You will be shocked, because once you understand what this chart shows, it's insane. It's insane. It has to be addressed. It has to be addressed. And then we're going to look at ways that the trade deficit can be tackled, and if the tariffs that the president is now implementing against countries, if implementing tariffs to tackle the trade deficit is actually the right way to go, right? So we're going to look at all of that in this video. And then at some point in this video, I'll have like a small gift for you, which will be how I can tie all this information and lead me to a stock that I think is a very sound investment. But sound investment is for me. I think for me, it's personally speaking for me, not for you. You'll have to do your own due diligence. Before I get started, I have a gift for everyone, a way of saying thanks for supporting me and watching this YouTube video and all my other YouTube videos. So if you want to subscribe, that'd be awesome. At the top of the description of this video and every video going forward, there is a description and a link, which is in regards to a PDF file that I came out with to help you navigate market uncertainty. And this is it. This is the PDF file that I came out with. If you click on it, it's, like I said, it's in the description of the video. Market Uncertainty 2025. There's a lot of information here that you can see, and obviously you can click to download this PDF if you want. The trade deficit, everyone, is a way to calculate or measure, let's say, in dollar amount for the US, how much it imports versus how much it exports. So balance of trade, that's it. It's the balance of trade. It is the difference between the monetary value of a nation's exports and imports of goods over a certain time of period. Now, you can also include services sometimes. Services are a bit tricky to put into this. Usually, everyone includes in this trade deficit information the goods. How much did I import? I'm just going to make up a number now. Did I import $100 billion worth of goods in 2024? How much in billions of dollars did I export? If you're importing more than you are exporting, it is damaging to your economy. At some point, it's going to catch up to you. So the United States has had many major trading partners over the decades, with annual imports and exports from them both totaling in the trillions of dollars. Ever since the 1970s, the country's imports started to overshadow exports, and the US trade deficit began to grow. This powerful chart that you are seeing right now is the trade deficit for the United States. In order to make it very simple for you to understand, first of all, it starts from 1990 at the end here and ends on February 28, 2025 right here. The further down this goes, the more the US is importing than it is exporting. It's that simple. We reached February 28, 2025 to have broken an all-time historic record in this nation's history of having, like a horrible trade deficit. Is this trade deficit, especially this is year to date. You see the straight line right here, guys? This is year to date. Going straight down. I mean, this is sharp, right? I mean, right now the U.S. just took a massive decision, the U.S. To import more than it. I mean, this is insane right here, if you understand this. The reason why this is happening, the massive amounts of imports increasing like crazy year to date, is because companies or whoever is involved in importing products into the U.S. to sell to the U.S. consumer are now in year-to-date importing at record amounts, or as much as they can, before the tariffs go into effect.
As families struggle to make ends meet, prices could be rising. That's the concern as President Donald Trump announces that starting Tuesday, 25% tariffs will be placed on products shipped from Canada and Mexico. The president also adding he's going to now double tariffs on Chinese imports. A 10% tariff on China already went into effect earlier this month.
This is going to stabilize at some point, obviously, right? So don't. I don't want to scare anyone right here, but let's zoom out. Don't look at this. Let's look at this. The trade deficit has been getting worse and worse and worse. Look, obviously we have to understand and we have to acknowledge the fact that no country can go on like this. You can't have a trade deficit getting worse and worse and worse by the decades, right? Somehow this thing needs to be tackled at some point. 60% of the US trade deficit has to do with China. That's because ever since China entered the World Trade Organization, the US began importing more and more and more and more Chinese goods. President Donald Trump has thought of one way to do it, and the way he is tackling the trade deficit is by imposing tariffs on other countries. So what is this administration aiming at by imposing tariffs?
First, he wants to use it as a tool to get other countries to do what he wants them to do. Secondly, he thinks of it as a tool to raise lots of revenue. And thirdly, he thinks of it as a tool to promote domestic companies.
In this chart right here, the source is from World Bank World Development Indicators database. We can see that countries with higher tariffs tend to have bigger trade deficits. To be fair, this chart is actually a little bit misleading because the US has more weapons and more power if it wants to, and if it wants to do it right, to impose tariffs properly and for the proper amount of time.
In the short term, it will work. The challenge is over the longer term, this is going to encourage other countries to reduce their interactions with the US.
Well, let's say we implement high tariffs for a very long time. This will lead to lower imports. Obviously, for the US consumer, buying something that came in from another country, it would be too expensive. This will reduce the supply of dollars to foreigners. This will raise the foreign price of the dollar. This will lead to lower exports. And why does it lead to lower exports? Because then US made goods are more expensive for other countries to import. By the way, obviously something you probably know and you have maybe executed in your life but you didn't realize it is when fuel prices go up, the imports are less. And it actually helps the trade deficit. And you can see that here when fuel prices were higher in 2008, the trade deficit for the US was healthier. Economists also say that the trade deficit is driven largely by macroeconomic causes like high consumption rates and is fueled by its position in the world's reserve currency of choice. The United States of America, with the trade deficit that it has, if it didn't have the dollar as a reserve currency, would have been bankrupt right now. Having a dominant global currency provides ample demand for US debt instruments, which benefits US companies and consumers through liquidity and stability of their currency. It also allows them to theoretically borrow at interest rates that are much lower than the rest of the world. Some economists, though, are saying that one way to correct, which I don't agree with what they say. I mean, it's a partial way, but not a full way. So some economists say that one way to correct the trade deficit is through the devaluation of the home currency. Sort of, it sounds like a good idea. It has some positive effects if you do that, but it won't solve the trade deficit of the US. The US, basically, in a nutshell, I think even a child can come up with this answer, is that the US needs to have more and more manufacturing companies producing in the US. But that is, again, easier said than done because companies put profit ahead of everything. And if you tell a company, open up your factory in the US, they're going to say, well, no, because I can pay a lot less for workers in Vietnam or in China. Okay, about time, Apple. Okay, you're charging insane amount of money for your products. Insane. More than what they are actually worth. And people in the US is your number one consumer of your product. So let's go over to the Peterson Institute for International Economics. They have come up with 3 ways that they believe the US trade deficit can be tackled and improved vastly from what it is today. And that is to consume less and save more. That's a tough one. With social media, I think that's a tough one. Like, especially for the young generation looking at TikToks, Instagrams, and then the influencers who are trying for the views and subscribers, pushing onto the young people this thing that, look at my life is awesome. I have this, I have that, I have a Ferrari, I got a Mercedes, I got this and this and that, whatever. The other is depreciate the exchange rate. We already covered that. And then the other is to tax capital inflows, says the Peter Institute for International Economics. Now let's talk about the stock that I think is great. So when I looked at the trade deficit chart and I looked at it and I said, okay, so the U.S. is importing more than it is exporting. I asked myself, what does the U.S. export that I can look at and say, oh wow, okay, they're exporting a lot of this. The world is importing for sure. This is something that the world can import and will continue to import. So it is oil and natural gas. The U.S. is the #1 exporter globally for oil and natural gas. So if there's one positive thing that I can find in this trade deficit, it is for me, and I've said this I'm laughing because I said this many times, Occidental Petroleum Corporation, ticker symbol OXY. All right, it has the backing of Warren Buffett, Berkshire Hathaway. It is a company with a really good balance sheet. They're in the oil and LNG. For me, this is one of the best investments. Personally speaking, for me, not for you. Let me know in the comment section below what you thought about this whole trade deficit, how you think it could be tackled or not, if you have, if you want to put your input. And if you want to join my Patreon, the link will be in the comment section below. And also, make sure to download the PDF that I came up with, which is for navigating market uncertainty. I wish you all the best and take care.